India has now surpassed Japan to become the world's
fourth largest economy in the world. It is now worth more than $4 trillion. Japan has...
The last 10 years have seen the sleeping giant India awaken on the world stage.
India on the world stage.
has stepped on the world stage.
From $2.1 trillion in 2014, the India's GDP is expected to rise to $4.2 trillion in 2025. This could make India the world's fourth largest economy, overtaking Japan. And in the next 2 to 3 years, we can be the third largest, surpassing Germany. The true story of India's economic trajectory is far more nuanced, surprising, and at times even contradictory. But all these are headline numbers that don't reveal the whole picture. As an investor, you must understand it as your investment outcomes depend on it. Hello and welcome to ET Money's YouTube channel. In this video, we will unpack the definitive decade that shaped India's financial future, revealing the wins, the struggles, and what it means for you. We will then attempt to assess whether India's growth will sustain itself over the next 10 years. This video is part of our playlist on market trends. To watch more such videos, do explore it. The link is in the description. Okay, let's start with taking a look at some key economic indicators in 2025 and now. Take a look at the table on your screen. It shows how key economic indicators have changed over the last 10 years. In 2015, India's GDP was $2.1 trillion. It has now doubled to $4.2 trillion. The GDP rate at that time was 7.6%. It is intact at 8% now. The GDP per capita has risen from approximately $1,600 to about $2,900. The rate of inflation has halved to 2.8% from 5.9% year on year. Consequently, the repo rate is currently at 5.25% compared to 6.75% in 2015. The fiscal deficit, however, has grown from 3.87% to 4.8% of GDP. Forex reserves is almost doubled from about $352 billion to $687 billion. The BSE's market cap has swelled 6 times from 75 lakh crores to 467 lakh crores. The Indian rupee now trades around 91 to a dollar as against 66. Finally, the unemployment rate has improved from 7.6% to 4.7%. Overall, except for a couple of parameters, India's economy has improved over the last 10 years. That's good news, but what has resulted in this growth? Let's assess the major factors in the next section. Before we move ahead, a quick update. Many of you come here for the kind of mutual fund analysis you rarely find elsewhere. Rolling returns, downside protection, and so on. But knowing how a fund behaves is one thing. Figuring out how to use that information in your investing decisions can be difficult because each of us have our own risk, comfort, and goals. That's exactly why we built ET Money Select. It's a personalized shortlist of funds that stand out from 2,000 plus mutual funds, not just on returns, but on how consistently they deliver and how well they protect when markets fall. The list is personalized to your risk appetite and gives you funds for long, medium, and short-term horizon. And for every fund, you get a simple note explaining how it invests and what drives its performance. Plus, an alert if the fund starts to dip or a better alternative is found. So do check it out. The first driver of India's growth story is its strong domestic demand, whose share in nominal GDP jumped to over 60% in FY25. This demand is in turn driven by a high share of the young population. In 2025, India's median age stands at 29.8 years. This is lower than the world average of 30.5 years. More than 2/3 of India's population is in the working age group. Now, the youth drives demand through spending on housing, consumer goods, and discretionary items, education, healthcare, travel, and other expenditures, and through credit growth in the economy, which triggers a multiplier effect. The young population is also central to any country's growth as it provides the necessary human capital. Now, the second driver is the strong services sector, which comprises banking, finance, IT/ITES, healthcare, education, retail, hospitality, logistics, telecom, etc. It contributed 55.3% of the total gross value added or GVA in FY25. The services sector is also a major contributor to India's exports. In FY25, it contributed 47% to India's total exports, up from 44% in FY24. The third factor is India's digital ecosystem. It has resulted in improved efficiency, promoted financial inclusion, and created new opportunities. The productivity in India's digital economy is 5 times higher than that in others. Further, its share is projected to reach 20% of gross value added by FY30. Now, the popularity of UPI and deeper internet penetration have played a key role in the wider adoption of digital way of working. Between 2016 and 2024, the UPI value of transactions grew from 708 crores to an amazing 23.25 lakh crores. Between March 2014 and June 2024, the number of internet connections jumped from 25 crores to 97 crores, a 286% rise. Of course, India's tech startups have a bigger role to play in the digital transformation too. By integrating technology in conventional ways of working, they've helped expedite India's tech transformation. The next agent behind India's growth story is policy reform and government incentives. Over the last 10 years, the Indian government has implemented several land park reforms that have pushed India's growth to a higher orbit. The most monumental of these reforms include the implementation of GST, Insolvency and Bankruptcy Code or IBC, Banking Sector Clear-up, the trio of Jan Dhan, Aadhaar and Direct Benefit Transfer, Ease of Doing Business, Make in India, Product Linked Incentive or PLI schemes, the Infrastructure Capex push, Income and Corporate Tax cuts, New Labour Codes, and most recently opening of the nuclear sector to private players and 100% FDI in insurance. These reforms have played a key role in reducing complexity, improving efficiency, and unleashing India's growth potential. The fifth driver of India's growth has been low inflation. Now, over the last decade, India's retail or CPI-based inflation has remained in the lower single digits as compared to the higher single digits from 2008 to 2014. This has helped in keeping interest rates low and contributed to growth. But all is not well with India's growth story. There are many challenges too. Let's take a look at them in the next section. There are many pockets of weaknesses within the Indian story that can derail it if they are not addressed timely. First is high economic inequality. While the Indian economy is growing fast, it appears that this growth has benefited the wealthy more than the average citizens. As per World Inequality Report 2026, India's richer 10% command 58% of the total income. That's up from 57% in 2021. The top 1% alone pocket 22.6%. The highest since the end of the British rule. Now compare these numbers with US and China. There, the top 10% have an income share of 47% and 41% respectively. The top 1% command 20% and 15% respectively. The second challenge to the Indian growth story is a comparatively limited contribution of manufacturing. As per World Bank data, the value added by manufacturing as a percent of GDP has fallen over the last 20 years from 16% to 13%. Now, the manufacturing sector is important for any country's economy as it makes a country less dependent, creates jobs, boosts exports, and has crucial linkages with the agriculture and services sectors. Now, to boost manufacturing, government has launched programs like Make in India, Atmanirbhar Bharat, and production-linked incentives. The share of manufacturing is expected to jump to 25% of GDP by 2047. The third challenge to India's growth story is job creation in low productivity sectors. To be sure, India's unemployment rate has fallen over the last 10 years and stands at 5.2% as of October 2025. However, since 2019, productivity in India has stagnated. Without a rapid rise in productivity, India could remain a middle-income country. While consistently improving, the participation of women in the workforce remains under 50% and thus implies a missed opportunity. Now, the next area of concern is basic amenity space. While on one hand, India is an emerging power on the world stage, and on the other, it lacks basic amenities such as clean water, sanitation, clean air, healthcare, and education. Now, according to water.org, a global non-profit organization working in the area of clean water and sanitation, of India's 140 crore population, 34 crore lack access to clean water and 50 crore to safe toilets. Access to healthcare is quite uneven too. While India's ratio of doctor to population stands at 1 doctor for every 811, which is better than 1 for every 1000 that the WHO recommends, not all areas enjoy this density. The states of Bihar, Chhattisgarh, Jharkhand, Mizoram and Nagaland lag far behind. Air pollution has emerged as a major threat to public health, with India housing all of top 10 of world's most populated cities. On the education front, the Annual Status of Education Report, or ASER 2024, which focused on nationwide rural households, does highlight improvement, but the absolute numbers still remain concerning. The proportion of Standard 5 children who can read a Standard 2 level text stood at 44.8% in 2024. It was 44.2% in 2018, but fell to 38.5% in 2022. Now, the performance of Standard 8 students in basic arithmetic was 45.8% in 2024. This was around the same level of 44.1% in 2018. The final key concern with India's growth story is crucial infrastructure gaps. While the government has been proactively addressing infrastructure issues through programs like PM Gati Shakti, National Infra Pipeline and Infra Capex, there is still time before problem subsides. A PhDCCI Grant Thornton Bharat report pegs India's infrastructure gap at 21.5 lakh crore. In its 2025 report, the World Bank estimates that India will have to invest $2.4 trillion by 2050 and $10.9 trillion by 2070 in urban infrastructure to effectively meet the needs of its population. So it will not be wrong to say that while India continues to progress as an economy, the underlying impact is quite patchy, with not all sections of society and economy moving in sync. Now, given all this, what could be India's growth ahead like? Let's discuss that now. But before that, let me request you to subscribe to this channel if you aren't already a subscriber, to press the bell icon so you'll never miss a video from us. India has set itself an ambitious target of becoming a developed economy by 2047. For that, India needs to grow on average by 7.8% per annum. This provides some growth visibility for the years to come. However, this goal is not going to be easy, even for a fast-growing economy like India. Historically, on numerous occasions, GDP growth has been below this mark. So, to maintain its growth momentum over the next 10 years and eventually until 2047, India will need to do 4 things. First, it will have to keep its growth drivers working. Second, it will have to actively work to overcome the challenges. Third, it will have to latch onto high growth opportunities. And fourth, it will have to stay prepared for the potential threats to its growth. Now, we discussed India's growth drivers and challenges earlier. Let's now take a look at the high growth opportunities that India will need to tap to accelerate its growth. Now, these opportunities or themes can also be highly rewarding for investors, so do watch them to your watch list. The first such opportunity is China Plus One theme. As countries around the world seek to reduce their dependence on China, India has emerged as a good alternative. This shift can take India's exports to $835 billion by 2030, thus growing at 10% per annum between 2023 and 2030. Amid Apple's efforts to shift production away from China, the Chinese tech giant Foxconn, a key contract manufacturer for Apple, is injecting $1.5 billion in its India arm. The second opportunity is India becoming a semiconductor hub. India's chip market is expected to hit $100 to $110 billion by 2030. Now, to boost semiconductor manufacturing, India has set up a semiconductor mission with an outflow of 76,000 crores. The next key opportunity is green energy leadership. India aims to achieve 500 gigawatts of non-fossil fuel-based capacity by 2030, including solar, wind, and hydroelectric power. India has also identified green hydrogen as a key source of clean energy, and to harness it, our national hydrogen mission has been set up. The mission targets the production of 5 million tons of green hydrogen annually by 2030. Then comes the space economy. India is decentralizing its space economy, aiming for a $44 billion market by 2033. Over the past decade, 11,000 space-related startups have emerged. Over 200 space startups enjoy funding, regulatory and incubation support from ISRO, InSpace, DOS, and state governments. Now, other potential opportunities exist in the realms of contract research and development within the pharma space, electronic manufacturing services, and data centers. We have covered these emerging industries in an earlier video. I've included its link in the description so you can watch it later. Further, nuclear energy, critical minerals, and shipbuilding are among crucial areas that India must excel for both increased self-reliance and future readiness. We discussed these three themes in detail in an earlier video. As usual, the link is in the description. Last but not the least, given its large population, India is also becoming a hot destination for AI. Tech giants around the world are queuing up to invest in India. Recently, Microsoft announced a $17.5 billion investment in India for AI. Similarly, Google has promised a $15 billion investment in AI, and Amazon has committed $35 billion in AI, exports and jobs. OpenAI is exploring setting up a data hub in India. Now, apart from latching onto these opportunities, India will have to keep the potential threats to its growth at bay. The first such threat emerges from the geopolitical scenario. Two recent concerns for India in the geopolitical arena are tariff tussles with the US and a bellicose neighborhood. The India-US trade negotiations kicked off in February 2025, and an outcome is still awaited post 6 rounds of discussions. The US is an important trading partner for India. In FY25, India's exports to US stood at $86.5 billion. The US commands 18% of India's total goods exports. High tariffs on Indian exports can make them less competitive in the US market and hence hit the Indian economy. Now, India's problem with the US are not limited to tariffs. Donald Trump's presidency has also far been quite volatile, and nations around the world have struggled to make sense of it. The unpredictability of US policy changes pose a significant threat to not just India, but the world. India's quarrelsome neighbors, Pakistan, China and Bangladesh, also pose a security threat to it. Overall, the geopolitical arena is quite challenging for India, and the scenario keeps shifting frequently. This can draw focus away from growth. The second threat to India's growth story comes from within its own borders. Heightened communal tensions and intermittent communal clashes continue to be a source of concern for India. Now, on the economic front, the high crude oil prices have always been a threat to India's story. Since India is a net importer of crude oil, high crude prices can stoke inflation here. High inflation is followed by high interest rates, which tend to stifle growth. In FY25, India's crude oil import bill stood at $137 billion, up by 2.7% over the last year. Fortunately, cheap crude from Russia has proved to be beneficial to India. However, concerns around the US sanctions on Russia remain. A consistent rise of the US dollar against the Indian rupee can make Indian imports expensive but aid Indian exports. So, these are some threats to the India growth story. Let's summarize the findings of this video in the concluding section. In a world beheaded by growth concerns, India is an oasis of hope. It is the world's fastest growing major economy. This growth potential is closely tied to investor returns and hence should be assessed from time to time. In this video, we discuss the key driver of India's growth over the last 10 years, challenges that still remain, and what to expect over the next 10 years. From this analysis, we can conclude that the reality of India's growth is quite complex if we look beyond the headline numbers. This suggests that the next 10 years are not going to be easy, though there is hope. And this requires regular due diligence on the part of the investor. As an investor, you can maintain a list of all these factors and carry out the analysis of India's growth story from time to time. This can act as a macro layer for your analytical framework. Do let us know what you think about India's growth story for the next 10 years. And with this, it's a wrap for this video. I hope you found this video useful, and if you did, please share it with your friends and family. I'll be back soon with another video. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.